The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, the Federal Reserve is preparing for another rate hike as it kicks off a two-day meeting today. Wall Street economists forecast a 75 basis point rate hike. And the SEC is probing Coinbase for allegedly listing securities. Bloomberg reporting the investigation predates last week's insider trading lawsuit. Joining us now to discuss the crypto markets is Paul Eisma. He's the head of trading at Institutional Crypto Financial Services Group, XBTO. Welcome, Paul, to the show. So, first day of the FOMC meeting kicks off today. We're seeing the crypto markets, taking a bit of a dip there. Is that because they're trying to price in that 75 basis point hike, or what's going on?
Yeah, that's the what's on the table for this week. Actually, if you look at most of the broader economic data and earnings data that's actually out this week, there's a lot going on, right? Obviously, the highlight will be the FOMC meeting on Wednesday, which, as you said, the markets are pricing in around 75 basis points. We also have a whole bunch of tech earnings. We have Apple, Facebook, Google, Apple, Amazon, Microsoft, Facebook, and then, after the interest rate decision on Wednesday, we have GDP on Thursday, we have, the PCE number, which is actually what the Fed looks at. I realize the market, focuses more on CPI. So there's a plethora of data. So, basically for risk markets, it's been volatile. It's been choppy, and crypto has, followed along because of their beta has been so high. So yeah, we're really stuck in this range, and we're waiting to see what the data is and what the Fed, really what their guidance is, right? Is there, what do they, foresee? Okay, we'll do the 75. What do they foresee for the balance of the year? What Powell will indicate as far as guidance, I think, will be more important.
I'm taking a look at the traditional markets now in the U.S. equities, futures markets. It's looking lower, as well as European equities. Asian markets are a little mixed results. And heading into this meeting, what kind of keywords are you looking for to determine whether or not there will be more hawkish activity from the Fed going forward, or perhaps, a bit of a slowing down of their rate hikes?
Yeah, that's a good point. The reality is the Fed is in a bind, right? They can really, the upward pressure on inflation is really, not really from, excess demand, which they can control. It's really been driven, for the most part, from the supply side, given, the hangover from the pandemic, the demand from the economy coming out of the pandemic, and then also obviously the supply chain disruptions that have been caused by the Russian invasion, right? So I think they have to have a balanced approach, but I think they don't want inflation expectations to get embedded, right? Because that's more dangerous than, say, putting the economy in a mild recession, right? And that's the balance that they're going to have to try to express, right? The labor markets are still tight, and historically, if you look back, it's when the Fed has actually begun to pause or even bring stimulus back to the economy to sort of prevent this type of mild recession or recession, even in the face of inflation. It's become even worse, right? They know how to deal with recession, and it's really tricky, the inflation that they're trying to suppress right now. So that's what I'm looking for. I'm trying to see the balance that Powell can provide.
So XBTO specializes with working with institutions. So I wonder what kind of word on the street you're hearing about activity, inflows, outflows from larger investors.
Yeah, it's kind of both ends, right? There's guys that are have begun to dip their toes in the water, around the 20s and below 20s as well, realizing that this is really a broad risk asset dynamic, right? Granted, there have been obviously specific idiosyncratic events that have been going on in our markets. For example, the Luna Terra, the 3 Hours Capital, the Block by Celsius. These are all well-known dynamics that are specific to our industry, but that has been affected by these broader macro headwinds that really began in the beginning of this year, right? So, yes, they, the people we speak to are, they're trying to be measured and smart, right? Because gunpowder, cash, fiat is very important at this moment, and trying to understand that, in these types of dynamics, right? They, you want to go to cash, right? So sentiment's not great, cash levels are high, people are understanding that, maybe their broader asset portfolios, maybe sort of the crypto native specific firms, but guys that have really begun to look at the space and are beginning to allocate. So traditional funds, they have other obviously assets that they need to manage as well. And it's, again, I've mentioned before that, crypto is the riskiest asset along the risk spectrum. So it needs to be treated, accordingly, right? So I think people are having this measured, balanced approach. We're definitely at some, decent valuation levels, particularly, in and around, for example, this move in ETH, which is, which basically began after, that developer meeting that put the September 19th sort of date on the horizon. The ETH BTC cross, which is something that we look at closely, has outperformed. I mean, in 7 to 10 days, it's up almost 30%, right? So
we have seen a lot of activity from Ether with the merge coming up, very volatile. I mean, it had a big charge earlier in the week, but now also a big tumble. Between Bitcoin and ETH, what is your outlook?
Yeah, I mean, I think again, one is has more of a broader macro dynamic, right? Because Bitcoin, which is the bellwether, still has a Pearson correlation of 0.64, 0.65-ish to not only the SPX but the NDX, right? So, and then you're talking about the second most highly capitalized coin, which is ETH, that has this, again, this idiosyncratic specific event that is, people are, trying to ultimately, price that in. What's going to be the, the positive effect? So, it's always tricky trying to understand what markets are trying to price in. We have definitely seen some flows over the past couple of weeks, particularly within that cross. We're taking, outright views on, ETH. Some smart guys have come in, and that has effectively, affected, I guess, coins further along the risk asset spectrum. So, again, it's tricky. I mean, I hope we can navigate this week. I mean, in a range would be a victory. We also have
we've
month
seen
end, right?
Bitcoin
So
within the range of 18 to 23,000 for the past several weeks. I wonder if you see any breakout.
That's right. Yeah, that's a good, you're very smart. This is, we're outside of this mini range and we're on the top side of the range, right? And I think, that does coincide. That was really, that quote unquote low was in and around, the high of the CPI number, which is when broader risk markets began to rally, right? So, we kind of rallied, crypto rallied with that and then broke through, this mini range. But yeah, again, this is a tricky week, right? If with so much event risk this week and volatility, it's somewhat smart to either take some short-term profits, to see what the if sort of the dynamic has changed a bit, right? It's always smart to lessen risk going into again the the events that are coming this week. So you're right. We are maybe the summer is maybe.
It's interesting,
Yep.
Bitcoin cryptocurrencies were created as an alternative to the traditional financial system, but very much guided by the traditional financial system as we await the Fed decision.